This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, happy Triskaidekaphobia, everybody.
There she is.
I know.
There she is. Carol Massar on Friday the 13th.
You know, which made us remember that if you go back to March 2020, we had a Friday the 13th. It was the last time we had guests in studio before we kind of stopped people coming in. And then the following week, I know it was just a couple of days, and I was home in my studio.
For months at that time.
For months at a time.
6 years ago.
Yeah.
Okay.
I mean, not like a little has happened.
The market was dealing with a lot then, and now it's trying to deal with quite a bit as well.
You're absolutely right. We've got the U.S. war in Iran closing in on that 2-week mark. No end in sight. It seems like the fighting is as strong as ever. WTI and Brent crude bouncing around. We are higher, though, on the day. But we did see the S&P erasing a nearly 1% advance as the Wall Street Journal came out with a report about the Pentagon moving a Marine expeditionary unit to the Middle East. There's a lot still going on there. Yeah,
Iran stepping up its attacks on the Strait of Hormuz. We're going to have much more on the trade in just a moment. But if I look at what the S&P 500 has done this week, it's actually down about 1.5%. And then, Carol, if you look at it year to date, we're down 3% on the S&P, 5% on the NASDAQ composite.
Yeah, and a crazy trade along the way, right, to get there. Coming up, what you need to know this hour and what you need to know about the Fed's preferred inflation print. We're going to get into that. Our Mike McKee, he's sitting down right there. He's going to come on in just a moment. Also weighing in on that, and Tim, what it means for Fed policy. We've got Mike Collins, PGIM Fixed Income Managing Director. A lot to talk about with him.
Plus, we're going to take a look at America's decade-long AI war efforts, trial by fire due to the U.S. war in Iran. It's all in a new book by Bloomberg's Katrina Manson. She's joining us in just a few minutes.
Incredible. She's been reporting on this for years. And you can't talk about the now 2-week-old U.S. war in Iran without also thinking about the now more than 4-year-old war between Russia and Ukraine, right? Like, folks, we have to remind everybody, I almost feel like that is still going on. The CEO of the largest telecom and digital operator in Ukraine is going to be with us with the realities of war and really what they are doing in terms of building back their operations.
All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Happy Friday the 13th to the two of you. We have got the Dow, the S&P, NASDAQ all in the red. Got to begin with what's happening with crude. West Texas Intermediate crude back at 97.95, closing in on 98. Brent closing in on $103, 102.65 now. Barrel of Brent up by 2.2%. Bottom line, stocks moving lower. S&P was up by almost 1%. Right now, the S&P is down 0.5%. 34-point drop there, 66.38 on the S&P. The Dow down 61, down 0.1%. NASDAQ down 221 for the NASDAQ Composite Index, a drop of 1%. The VIX at 27, the 10-year 4.28%. Gold is down $33 the ounce to $5,046, a drop there of 0.6%. And again, barrel of Brent 102.70 right now, up by 2.2%. Oil majors trading mixed. We've got ExxonMobil up by 1.7%. Chevron down 0.3%. ConocoPhillips up by 1%. Recapping, S&P down 0.5. West Texas Intermediate crude now above $98 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thanks so much. We did get some U.S. data today. Early this morning, economic data showing U.S. consumer spending barely ticked higher in January. Growth was weaker than previously reported for the fourth quarter of 2025. And that so-called core personal consumption expenditures price index, which excludes food and energy items favored by the Fed, rose, Tim, a firm 0.4%. U.S. consumer sentiment also declining to a 3-month low.
Inflationary risks. Investors weighing the path for interest rates. The Fed is forced to reckon with price pressures. We got Mike McKee with us because he's going to give us what you need to know. He's Bloomberg TV and radio international economics and policy correspondent. He joins us here in the studio. We got a lot of data this morning, some sentiment stuff too, or expectations, I guess you could say. What was the big piece of data that mattered, or help us understand which piece mattered the most?
Well, the problem is almost all of it is January data, in part because of the timing of their releases and in part because of the government shutdown. We're still getting some stuff later than usual, including the PCE numbers that we got today. If you were going to look at a up-to-date number. It's the Michigan expectations number. They surveyed up until the 9th of March.
Okay.
And it was very interesting. I talked with Joanne Shu, the director of surveys there, and she said that up until February 28th, they were getting a lot of positive comments about the economy, and people were feeling very good about it. And then March 1st, it all went off a cliff.
Yeah.
And so we did see a decline in the number, and she said probably expected to go further down when they get to the final number at the end of the month. And she said that inflation had been trending lower. It popped back up again, so it matched what it was the month before at 3.4%, but that could go higher yet still because people are very worried about inflation. The PCE inflation numbers, not good from a Fed standpoint in the sense that the core went up to 3.1%.
Without the war.
Without the war.
Right.
That was prior to the war. But now because of the war, this data takes on less relevance because it's all going to be about, well, what's the war impact going to be? How do we react with monetary policy to that?
I heard a really smart question on surveillance this morning from Alexis Christophorus, and she said, but wait, if this is just transitory in terms of energy prices spiking, we assume this war will come to an end, hopefully sooner rather than later. But if that's just transitory, does the Fed not look through that, Mike?
Oh, absolutely. The Fed comes into this primed to look through it. They've learned throughout history that oil prices are basically transitory things. They can go up for a couple months and then they come back down again. And monetary policy wouldn't do anything to change that. But what they're worried about is this whole idea, what they are thinking about is the whole idea of they were expected to cut more.
Right.
But if you do have ongoing inflation, and if this energy price inflation gets into other parts of the economy, which is easy to do because petroleum's used so widely, then that's an issue that maybe they don't want to cut over a long period. And we even have futures markets pricing in an increase in 2028. The other aspect of it,
2028.
2028. I'm not going to put a lot of credence
anything that's going to be true in 2028.
But the other thing we've seen is that the yield curve has moved quite a bit over the last 2 weeks. The short end has risen, but the long end has flattened. And you would think if there was a real inflation concern that both would be going up. But the problem is the long end is now looking at the idea of maybe we do have an economic slowdown.
Inversion?
Not inversion. Okay. We're nowhere close to that. But then the longer term becomes the Fed maybe lowering interest rates to help the economy. They're not going to do it in the short run. But if the economy is falling off a cliff, now all of this is, as you say, we have no idea how long this is going to last, so we don't know what they're going to end up doing.
Mike, I want to go back to the UMich data that we got, because if a lot of it has to do with how consumers are feeling and what they're actually talking about, how they expect to feel and what they expect conditions to be. We talk a lot about energy prices going up and we talk a lot about the war, but how does that translate into like a normal consumption, normal consumer behavior for the average individual?
Well, what happens is people start thinking about their incomes, and the Michigan survey showed that people's income expectations for the rest of the year are dropping. And if you think you're going to have less money, and at the same time you think that you do have less money for discretionary purchases because more is going into the gas tank, then you cut back on spending on other things. And that can grow to a point, and we've seen it a couple times in history, where the economy starts to slow down because demand slows.
Mike, just looking ahead to the Fed meeting next week, right? Obviously a major focus. So obviously we don't expect the Fed to do anything, right?
Right.
So what is important in terms of commentary?
Well, ordinarily we would be looking at the dot plot, and we would be looking at their economic projections. Both of those are going to be very interesting because how do they figure out what they're going to put in since with all these questions that we've been talking about?
I almost think it's like when was it that companies were giving like two earnings scenarios?
Yeah.
What was that?
Was
it COVID?
No. That was so-called
tariffs.
Yeah, on
tariffs. Yeah.
Like I almost feel
Liberation
like the Fed's like if the war ends here, and the war, like it's almost like
I'm sure they would like to do that, but they've got to put some numbers on it. So I think what we'll get is their best guess at the moment, and they'll basically put an expiration date on it and say this isn't going to. don't take us at our word here because we don't know.
Is this the last one of Jay Powell?
No, he has one more in April.
All right, good
He
stuff.
might have more after that if somebody doesn't get confirmed, too.
Yeah.
So.
That's true. But,
Clock's
this
ticking,
whole thing has done probably Kevin Warsh a favor because now President's going to say, come in, Kevin, cut rates. And he's going to say, I can't. Oil prices are up.
Yeah,
So-
exactly, right? Mike, what?
I just,
What?
you don't want to...
What do you want to do?
You don't want to be the guy who tells President Trump, who just nominated you, to cut rates.
Can you be like,
you're not going to cut
I can't
rates,
take his
but
call. I can't take his call.
Just throwing it out there.
I'm not here.
Lock the doors.
Just don't check Truth Social.
Mike, thank you so much. Have a great weekend. Bloomberg TV, radio, international economics and policy correspondent, our own Michael McKee. All right, that is what you need to know about the U.S. economy. Should we talk markets?
Yeah, let's talk to today's trade. I want to bring in Mike Collins, PGIM Fixed Income Managing Director and Executive Portfolio Advisor, joining us from Sarasota, Florida. $1.5 trillion in assets under management for the company overall. Fixed income, about $1 billion. Mike, something has shifted when it comes to the credit sell-off. In recent weeks, there have been identifiable drivers. What are you seeing in a fixed income market? Are people more risk averse right now?
Yeah, absolutely. Right. This big spike we've seen in oil associated with the conflict in Iran is definitely giving people pause with regard to the overall economic backdrop. Right. I mean, you're seeing the front end, as you've been talking about with Mike McKee, elevate over the last 2 weeks. It's really remarkable, Tim. Right. I mean, since February 28th, as Mike said, a lot of things have changed. The front end has taken out 2 full Fed rate cuts off the market in 2 weeks, right? It's really a remarkable change. And that alone, I think, puts pressure on financial assets, on financial conditions, on top of the oil prices you were talking about. Gas prices at the pump will hurt people's pocketbooks. We did an analysis this morning. If oil goes from 100 to 200, that cuts GDP a lot. That means a lot of people, instead of spending 5% of their discretionary income on gasoline, it doubles to 10, right? And that really puts a halt on consumer discretionary spending. And on top of that, you've had all these idiosyncratic credit problems emanating mostly from the leveraged loan market or the private debt markets. And that's giving people, worrisome ideas of maybe we're getting late stages in this credit cycle. And obviously you've seen the parallels, at least in the press, to 2008, which I really dismiss, and we can talk about that.
So let's go right there. B of A's Michael Hartnett is actually out, Mike Collins, and talking about the spike in oil prices, also about the growing concerns around private credit, which we talk about, as you know, every day here at Bloomberg. And he is saying that they're causing kind of market activity to resemble the lead up to the global financial crisis. Do you agree? And he's not alone, as you know, Jamie.
I don't. I think what happens is when you get later in a cycle, in a strong bull market cycle, right? We've had a raging bull market in almost all financial assets over the last handful of years. Obviously, with that temporary dip during COVID, but really, it's been in kind of an extended cycle here. Whenever you have that type of expansion and equity multiples skyrocketing, you kind of get this culture of greed, and everybody wants to hit the next home run, and that's when you start seeing evidence of fraud, evidence of really aggressive financing, evidence of some re-leveraging and weaker underwriting, right? So we're seeing all of that happen, and it typically happens in the area that are getting the most inflows, the most demand for assets, and that just happens to have been in the murky, private credit type of markets where there's a lot less transparency, a lot less pricing regularities. And so you're seeing that. And to me, that's just a very natural, phase of the cycle. But man, the private markets, Carol, are tiny compared to, the mortgage market, for example, in 2007. It's like a tenth of the size of that, right? And the banks are not levered at all going into this. So there, you don't.
But they do have exposure, Mike. They do have exposure that reminds us that it's not just within kind of firms outside the traditional financial. I see what you're saying. I see you shaking your head. I mean, you say that that's not going to be problematic.
They have some exposure, but the growth in the private debt markets has really kind of offloaded the banks who used to make those loans, those riskier loans. And after the financial crisis, the regulations really required them to take less risk and not invest in companies that had, more than 6 turns of leverage, for example. So all of that kind of risk went to other places that kind of have a better, asset liability mismatch, that you don't have a run on the banks necessarily in the private debt markets, because you do have the ability to put up these gates and restrict outflows. So I think it's very, very different. But credit spreads are widening, right? They are almost 25% wider from the tights earlier this year. And that's how we think of credit spreads in our world. Like, how much wider are they on a percentage basis? And that's a lot. I mean, that's a big move. And over the last, handful of years, when you've seen that kind of move, it's typically been the area where people kind of step in and buy, right?
Well,
and you've seen demand in the corporate and high yield markets, really strong demand for at higher yields for our bonds.
So Mike, I mean, you're not seeing, in terms of your exposure, the firm's exposure in the private credit world, you're not seeing any kind of signs of stress, any kind of problems, anything?
No. But I mean, we've been, not to talk our own book, we've been doing private credit for a century, Carol, and we're a very conservative underwriting shop at Prudential, at PGIM. We always have been. We have a large cap private credit strategy. We've looked at over 200 deals last year, and we've invested in 25 of them, right? That's how you do private credit. And so I mean, they're all different flavors of it. And if you look at the funds that are gigantic, these multi-billion-dollar funds that bring in all this money, they really have to put that money to work, right? So they have to be a little less discerning.
So if private credit, if this is not a concern to you, what is a concern to you in this environment? Is it an inflationary environment because of higher oil prices? Is it a war that drags on? What is it?
Yeah, to me, it's the rate side.
Higher rates, right?
That's a little confusing. I think the credit side is actually in good shape. We just got the results from the fourth quarter of all the corporate earnings. In fact, Morgan Stanley just put out a report this afternoon on, they update the credit fundamentals of the investment grade and high yield corporate bond markets, and they have not deteriorated at all. Right. In fact, they even slightly improved on the margin. So the leverage in the public credit markets is really good, and companies are in really good shape. But the rate side is causing some of the problems, right? Some of the repricings, you see these sudden drops in prices in the private markets. A lot of them are being attributed, there's some fraud, but just, wow, rates are a lot higher than when we underwrote this deal. And these companies that have a lot of leverage are struggling to refinance their debt at these higher interest rates. So the sustainability of these high rates kind of weighs on credit quality, for sure. You see all the leverage loan companies that issue floating rate debt, right? They are being hurt by higher rates. And so I'm looking at, these higher oil prices. And this morning, we actually did a study. We went back and looked at all the big geopolitically induced oil price shocks and what happens to inflation and what happens to the Fed funds rate after that. And in almost all cases, believe it or not, inflation is actually lower a year later, and the Fed funds rate is lower a year later. So I'm looking at the market's reaction to this war, and all they're pricing in right now, all the bond market is pricing in, is the inflation side of the equation, not the recession side, right? So I'm looking at this as a buying opportunity.
Well, and this is some of what Mike talked about too, our Mike McKee, about maybe further down the road that there is actually some problems in the economy. Mike, great stuff. Great to check in with you on this Friday. Have a great weekend.
So thank you.
Mike Collins, he is a PGIM Fixed Income Managing Director and Executive Portfolio Advisor, joining us from Florida. We talk a lot about the U.S. war in Iran. It's now 2 weeks old.
It is. There's another war going on right now. It's more than 4 years old.
Yeah.
That's what we're talking about next.
We're talking Russia, Ukraine. We've got someone operating a company on the ground. We're going to talk to the CEO, get an update.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A renewed surge in crude oil. Right now I'm looking at Brent crude on the Bloomberg. It is above $103, $103.58 right now for a barrel of Brent. That is a surge of 3.1%. West Texas Intermediate crude, $99.09 a barrel. WTI up right now by 3.5%. Bottom line here, Oil is surging, stocks are falling, Brent bears repeating 103.60 right now for a barrel of Brent crude, a gain of 3.1%. We have got the Dow, the S&P, and NASDAQ all in the red as we run the GIP screen on the Bloomberg, looking at just about lows of the day on the S&P 500 index, down 33 now to 66.39, a decline of 0.5%. The Dow down 57, down 0.1%, and the NASDAQ Composite Index lower right now by 1%. The VIX above 27 with a 10-year ahead of next week's Fed meeting, 4.28%, the 2-year 3.73%. Gold down 0.7%, 5,042 the ounce, and again West Texas Intermediate crude $99.16 now. That is a gain of 3.5%. Keeping an eye on shares of Ulta Beauty, the stock is plunging 13% after the cosmetics retailer offered guidance for the current year that was toward the low end of Wall Street's expectations. Ulta again right now down by 13%. Recapping, S&P 500 index down 0.5% to 66.36. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. Well, shares of the ADRs of Kyivstar Group rallying today after the Ukrainian largest telecommunications company and mobile network operator did report earnings per share for the fourth quarter that beat the average analyst estimate. Shares are down about 15% year to date, off and move, understandably so, Tim, on the headlines concerning the war between Russia and Ukraine.
I want to bring in Oleksandr Komarov, the president and CEO of Kyivstar Group, joins us from Kyiv, Ukraine. Oleksandr, good to have you on the program. We want to start, before we get to the business, just on an update on what you're seeing, what life is like now that this war is in its fifth year. What can you tell us?
Okay, it's almost normal war during the war. Okay, we adopted a lot. Okay, so I can give you only one example. So during the December, February, 30% of time, our network was on the alternative sources of energy, like batteries and generators.
Wow.
But at the same time, network was fully operational across the country. So this is, from my perspective, a good reflection of where we are.
Yeah, go ahead, Carol.
How do you do that, though? How do you, are you constantly repairing and fixing things, or how do you keep things operational?
Situation is relatively stable across the territories under Ukrainian control. Mm-hmm. Okay, the only one threat is a Shaheds, drones, or missile threats that are not so fundamental for the so well-distributed infrastructure like telco operator. Of course, we are suffering a lot in the areas that are close to the front line, and we are doing our best in order to restore and recover as soon as possible. And this is very much because of the heroism of our people and preparation and actually certain experience that we were able to gain during these 4 years in a war. We are doing a lot in order to strengthen our resilience. We did a lot of investments into the redundancy. We did a lot of investments, almost 100 million, into the energy resilience. So from our 16,000 sites right now, we can run almost 6,000 sites on the generators, and this number is increasing. On the batteries, we can run network literally for up to 10 hours without energy at all.
Oleksandr, I mean, it's. I don't want it to sound crass how I'm asking this, because it's a business question, but that's kind of how you've presented the challenge here. When you run a network in a way that has to be resilient during wartime, and you talk about using generators or other sources of backup power, that costs a lot more money and hits the bottom line in a different way than if you didn't have to rely on those resiliency measures. How much more is it costing you?
Actually, we see a certain decline of our marginalities in the beginning of the war.
Okay.
But this is from the position that Kyivstar used to be the best by marginality telco across the globe. With a record high 67% EBITDA margin, we are right now at the level of 56% EBITDA margin. The biggest challenge for us is how to, let's say, combine this resilience, necessity to be extremely focused on our daily operations with the development. And this is, I think, what we are doing in a really well, I will say, very well organized and a good format, being able to achieve a quite significant diversification of our business from a pure telco in a mobile and fixed market leader in a mobile and fixed business to the digital service provider with a telco license. We finished this year with almost 16% digital revenue that is partially related to the telco, but produced by the services like digital health, entertainment, ride-hailing, big data.
Well, on the cost side, does the new war in Iran and the higher energy prices associated with that hit margins in this current quarter?
To some extent, we adopted since the beginning of the war. The Ukrainian market was characterized by a relatively low energy prices before the war. Okay, but because of the shortage, because of the destroyment of the production facilities by the Russians, and necessity to import energy from the neighboring countries. Right now, Ukrainian business is working on the Eastern European and sometimes even Western European tariffs. Okay, and from this perspective, I think that we are quite okay. Okay, we adopted this growing cost. Okay, and we are doing some proactive steps how to hedge this cost in the future. Maybe you saw, but we did our first small investments into the solar power plant. And this is the way how we can increase resilience and redundancy of the energy supply. But from another perspective, this is the way how we can hedge electricity cost on the consolidation level of the Kyivstar Group.
Oleksandr, that was one of the things I was curious about. Like you mentioned, you're combining resilience with development and, how much you can do of just keeping the company, running day to day and your employees safe and meeting what your customers need amid a war, versus thinking about strategy longer term and how you want to, commit funds, CapEx, what have you, to build out the business longer term. It sounds like you're able to do that.
Yes, the reality company is performing quite good. We have support of the shareholders, and I can give you probably the best example how we see the combination of the, let's say, growing resilience and redundancy with the development. We were, and we are actually the first European operator to launch direct-to-cell services provided by Starlink. Okay, so we see this as the development because we believe that actually the future is in cooperation between terrestrial and non-terrestrial networks.
Right.
That's why we are doing this proactive step. But at the same time, we provide this service to our customers for free, taking into account the current circumstances and major fundamental humanitarian need to stay online, within very difficult circumstances, sometimes circumstances that are dangerous to your life.
Yeah. Hey, one of the things I'm curious about when you say Starlink, do you think at some point, that is what kind of replaces some of the traditional telecom mobile service companies? Is that kind of where things are going?
I don't think so. I think that the future in cooperation rather than competition. Every country is quite unique. It's a difficult regulatory framework, and somehow satellite networks have a fundamental disadvantage. This fundamental disadvantage is open sky, necessity to have open sky when you are using satellite services. So moreover, it's a major issue with capacity, and it will be extremely difficult to service high-density cities like Kyiv, New York, London with satellite technologies if the number of customers will increase. But at the same time, we see a number of fundamental use cases where we can use satellite technology in order to expand our geographical coverage, to optimize our investments into the geographical coverage, to ensure emergency communication for every customer, independent from the terrestrial network that is actually under daily attacks from the Russian side.
So in other words, that technology can supplement traditional terrestrial cellular technology, but because it doesn't necessarily have the same coverage indoors or in homes, it won't replace it in your view ever.
Yeah.
Okay.
Yes, I think so.
So, Oleksandr, I'm curious about the Ukrainian customer right now and how spending has shifted in recent years as this economy has entered a wartime economy, as different members of the economy have gone off to fight, come back from fighting, gone off to fight again, and that sort of thing. What does your customer base look like specifically in Ukraine right now?
The biggest issue is demographic crisis and migration crisis that we are facing in Ukraine. So we have right now, according to different sources, around 32 million Ukrainians in Ukraine. Okay, and unfortunately, it is slowly decreasing because of the war, because of the migration. As an example, we have on a monthly basis around 2 million customers being serviced abroad. These are Ukrainian migrants out who are still connected to the Ukraine through Kyivstar services with their relatives, with their services in Ukraine, with their state-provided services, banking services in Ukraine. Okay, so somehow it's a quite, I would say, difficult situation as a result of the constant air attacks, shelling. Okay, we see the growing number of double SIMers in the country, and every blackout is actually driving people to buy extra SIM card in order to stay online and to ensure a certain redundancy from the potential problems. Okay, so somehow it's quite specific market that might be normalized after the war. We expect that, share of the Ukrainian migrants will be back. Okay, and this will be a huge economic, I will say, trigger for the future recovery.
Hey, one thing we wanted to ask you, just have about a minute or so left here, Oleksandr, is that our understanding is you also serve customers in Ukraine, of course, as we've been talking about, but also the UAE, the United Arab Emirates. Is that right? And if so, what can you tell us about what's going on there and what exposure you and your company and really your employees have?
As a Kyivstar Group, we have a very, very, very small exposure as we have a very small office in Dubai. Okay, so this is very much driven by substance, and we have just few employees there that are helping us with investment relationship, corporate affairs, and reporting. Okay, so of course, people's safety is our number one priority. Everyone is in a remote mode. Okay, but somehow we are partially affected even without operations overseas. So all our operations is concentrated in Ukraine, and we have ride-hailing business in Uzbekistan.
All right. We wish you well and look forward to hopefully catching up again with you in the future. Good luck with everything. Oleksandr Komarov, he's the president and CEO of Kyivstar Group, joining us from Kyiv, Ukraine on this Friday.
Hey, taking a look at markets right now, not on their best levels of the day, but off their worst levels of the day. Down 0.3% on the S&P 500. So on the week, as of now, Carol, down about 3% on the S&P 500.
All right, looking forward to our next discussion. America's decade-long AI war efforts. It's been going on for a while, getting a trial by fire in Iran. We're going to talk with our own Katrina Manson.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow back in the green. Been a volatile day for the Dow Industrials, bouncing around up 12 right now, little changed. S&P 500 index down 21, drop there of 0.3%. Stocks are falling with NASDAQ down 0.7%, but Brent crude, it is surging 102.57 right now for a barrel of Brent, up 2.1%. West Texas Intermediate crude 98.09, now up by 2.5%. The VIX holding above 27 with a 10-year 4.28%, the 2-year 3.73%, and gold right now down $36 the ounce. Spot gold at $5,043, lower by 0.7%. Those oil numbers bear repeating. Brent crude 102.54, up now by 2%. Unionized workers at Starbucks say they have made a new contract offer to the company, and the two sides say they are working to restart long-stalled talks. Shares of Starbucks today, right now, they are down 0.3%. Again, a volatile session on track for another losing week for the S&P 500 index right now at 66.51, down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the U.S. war in Iran, as you know, just about to enter its third week. President Trump warning that Iran is, quote, going to be hit as the U.S. says it intensifies its strikes. Now, earlier today, we got some information about the U.S. war in a Pentagon briefing by U.S. Defense Secretary Pete Hegseth and Chairman of the Joint Chiefs of Staff Air Force General Dan Kane. Secretary Hegseth weighed in with a view on the state of Iran.
The United States is decimating the radical Iranian regime's military. Iran's leadership is in no better shape. We know the new so-called not-so-supreme leader is wounded and likely disfigured. He put out a statement yesterday, a weak one, actually, but there was no voice and there was no video. Iran has plenty of cameras and plenty of voice recorders. Why a written statement? I think you know why.
U.S. Secretary of Defense Pete Hegseth earlier today at a Pentagon briefing on the war. Today's Bloomberg Big Take is a story featured from Bloomberg Businessweek. It highlights an excerpt from the forthcoming book, Project Maven. It shows how the U.S. enlisted Silicon Valley in its vision for AI warfare that's now playing out in Iran. With more as the author of Project Maven, a Marine colonel, his team, and the dawn of AI warfare. Katrina Manson is with us. She's Bloomberg News reporter who covers tech and national security. Once again, congratulations on the book. I mean, the timing of this could not be more perfect, given what we've been talking about over the last few weeks, over the last few months, and the tech advancement that we've seen with AI just in the last few years. I want to get to the book and the history of AI in modern warfare, but first I want to start with what's happening in Iran and what you've recently been able to find about where AI is being used.
Very helpfully, CENTCOM has confirmed that they are using a variety of AI tools in their Iran operations. That essentially will mean Maven Smart System. So we've reported that Maven Smart System is being used. If you imagine a digital interface, something like Google Earth for war, you're beginning to get in the right kind of area. It is something that, using computer vision AI and more than 150 different data feeds that the US can draw on, tries to whittle down information, and CENTCOM confirmed to us generates points of interest. Now, what's a point of interest? Yeah. It's everything before a decision to target. So it's all the information you might need: elevation, location, who's there, what collateral damage might there be, what weapon can we bring to bear. That point of interest becomes a coordinate that, if it becomes a target, they can decide to strike on it. So that's something they're using all the time. And the commander of CENTCOM, most significantly, he's done a couple of video messages that have been out on X and everywhere. In the second one, he also publicly confirmed that they're using AI and that it's helping them speed up processes from what used to take months and days down to seconds.
Wow.
Are we alone in having this? Can we assume, Katrina, I know this is not, I'm kind of just bringing this on you. Can we assume everybody around the world is working on these kinds of systems?
The US is using a platform made by Palantir. This is Maven Smart System.
Okay.
That system is available in other scenarios. So what's public is NATO has it. Alex Karp has publicly said allies in the region.
Palantir's founder, co-founder,
yes,
CEO.
Chief Executive Alex Karp has suggested that allies in the region have it. Now, they won't have the same thing that the US has, because what makes the US system special is the data they can draw on, and Palantir doesn't provide that.
Like with most government things have been happening for a while. Project Maven, give us a little bit of background and history, because you've been writing out, reporting. You did another big take a couple of years ago. What is it? And what was the original mission?
If you imagine, in 2017, the US was deep into the counterterrorism wars, which were meant to be winding down, but were still going. This is the GWAT, the Global War on Terror. And the US had been fighting this war against jihadis armed with Kalashnikovs and IEDs, which were wreaking terrible injuries and deaths, of course, on the US military. But they were also beginning to think about the rise of China. China's military budget was going up. The US has still, by far, the biggest military budget going. But China was spending more and more, and they hadn't really thought about how to go up against, if ever the need arose, a big Chinese military that was leaning forward in tech, that was what they then called a near-peer adversary that arguably today is a peer adversary. And so the leaders in the Pentagon started thinking about autonomy and AI, and they started this project, Project Maven, with a really small-scale, narrow aim, which was to bring AI to bear on drone feed video footage. They were leaving drone feed footage on the cutting room floor. No one was really looking at it. They wanted AI to look at it and tell you what was there, but it was always part of a much bigger effort.
Palantir, as you mentioned, is behind Project Maven, but you've spent some time reporting on Anthropic, especially with regard to what's happened in the last few weeks with the Department of Defense and the upcoming and the lawsuit there. What are the other companies that are involved in this?
For computer vision, you go to the ones that we use for everything. Microsoft, AWS. There's a much smaller startup company that's become big, partly because of Project Maven, called Clarify, that was a startup doing identification of wedding cakes, of a bride's bouquet. And they switched, thanks to the influence of Project Maven, to starting to identify weapons instead.
It's a very big pivot.
It's a very big pivot, and it's partly down to the efforts of Project Maven's leaders to reach out to cutting-edge technology companies. This is a company that was doing fantastically well at image recognition in image recognition competitions. Kind of came out of nowhere thanks to the brains of the person leading it, Matt Zeiler, and convinced him, he had no military background at all, he was living in New York, to start bringing his technology to bear on difficult US national security problems, knowing that it would be controversial, but believing in the mission.
You know, one of the things in your book, and I don't know that I have time to do, but you say the department's efforts to build an AI-enabled fleet of drones that can attack by air and sea have been marked by false starts, missed deadlines, strategic incoherence. And officials are already looking past the Middle East to a potentially bigger conflict. As one person familiar with U.S. operation puts it, quote, Iran is an amazing precursor to what could happen with China over Taiwan. Is that the target? Like, how do you... I don't know. How do you process? How should we process?
So the US has said publicly that they believe China wants the capability to take Taiwan militarily by 2027. So that's become a very tough deadline for the US military to make sure they have the capability to defend Taiwan. Really importantly, the US doesn't say if it will or won't defend Taiwan. That's a policy of strategic ambiguity, they call it. But to defend an island, it's hard to take it militarily if China wanted to take it, but it's also hard to defend. And so for a while now, the US has been developing various ideas that they don't say much about in public, but they give us hints. One of those ideas is something called Hellscape, which is the admiral who leads US forces in the Indo-Pacific has said would buy him time. So they would put autonomous weaponry out there, drones, to stop any Chinese invasion, buy him time for a month, and then bring in the bigger defensive beasts. I have been trying to work out, well, what does that mean? What do those drones look like? And can they operate autonomously? That's important because things can get shot down.
I just want to know more. And you're going to come back. I know the book is...
And we can buy the book, too.
It's out?
It's out March 24, but apparently it's already in bookshops.
Okay, good stuff. You're going to come back. Congratulations. And we want to know more. Katrina Manson, Bloomberg News reporter covering tech and national security. When we come back, a check on trading and stocks on the move.